Hey, welcome to the Everyday Investor Podcast today. Before we get started, I want to assist you, especially those of you that are newer to following my stuff. You need to know who you are dealing with when you're listening to anybody online, whether it's podcast, whether it's YouTube, whatever it is, even if it's just blogs or newsletters that you read. There's often two groups of people. There is people that are trying to sell you stuff, and they're using this new medium of social media to reach into your world. Basically, it's content marketing. I don't have any bones to pick there. I think it's actually good because at least you're getting your advertising with some education. And especially as it relates to money, I think that's important. So who cares what the motivation is, as long as the outcome is people are getting better educated. But there's another group of people that I think don't get enough credit. And that's the group of people that do it with some sort of passion or higher purpose. I could think of a few people that were around probably 7 years ago when I first started podcasting that are still doing it today. And they're still doing it for the exact same reason. They're not selling stuff. They're just sharing stuff that actually can make a big difference in people's lives. So I'm a financial advisor. That's what I do during the day. I am a husband of one. I'm a father of three. I own my own home. I have investment properties and other types of investments. I believe in hard work. I believe in creativity. I believe in personal responsibility. I started my first job at the age of 12. I was working for $1.50 per hour as a dishwasher. I started a business to fund my way through university. And afterwards, I sold that and I used the leftovers to pay the deposit for our first home that we bought. Now, this all could be traced to the fact that after I finished my economics degree, I couldn't get a job. And I ended up starting a business in an area which would see a significant boom due to historically low and falling interest rates. So I started this financial advice business. And one day it allowed me to start a podcast about 7 years ago. And that's why we're speaking right now. So I've always kind of felt uncomfortable with the term financial advisor. I much prefer the term wealth strategist because it's a lot more consistent with what I actually do. But I know that I have authority to give away the information I have, not because of a job title, but because I've actually gone through the process myself. But there's certain characteristics about me that are fairly unique that haven't offended you yet. And because of that, I know that you're probably willing to do the hard yards. I know that you're going to be bold when the time is right. I know that you're not going to be afraid to think unconventionally and act unconventionally if it gives you the result that you want. So that gives you a little bit more insight as to why I do have some of these conversations with the people that I do have the conversations with and why I ask the types of questions that I'm asking. I'm trying to reference my own theories about how the world of investing works through actual experience of other people that I know will probably have not quite the exact same views as me. Anybody can lock themselves in a room with people just like them to get them to agree with them or to figure out what the commercial incentives are to line up a conversation that fits a little bit tidier into this. But if you're really trying to build new wealth for the new world, you kind of have to be listening to a few new voices or listen to voices in a new way. It is possible to understand just a little bit of what the future holds if you have an open, creative, inquisitive mind and you're having conversations with smart people all the time. You just have to ask the right questions. So in my mind, it does feel to a certain extent that I can see the future coming before most people who are willing to talk about it will. And that means that if you're trying to build wealth in new ways, you can understand a little bit about what might be coming next in terms of change, hopefully with the right degree of cynicism and optimism. So the season that I think we're about to go in now, if that's of interest to you, is a really important one. We've gone from a period of complacency, and then we've gone to a period of being a little bit angsty, and at some stage soon it will transfer into a battle period, which will eventually result in a completely different state. That different state, I personally believe, is going to be amazing, and I'd love you to get on the right side of that. But of course, this is not financial advice. It might help you, but I don't want you to think of it as advice of any kind. So hopefully by me sharing that, you can maybe understand that I really genuinely don't believe that investing is about getting a lot of money in your brokerage account. It's about owning your future rather than being forced to rent it. This is all about being a conduit of resource. You will become wealthy in the process.
You're listening into the Everyday Investor Podcast. Passive investing, property investment, managed funds, and crypto. If you're an everyday person wanting to build new wealth for the new world that you're heading into, then this podcast is for you. I'm Darcy Ungaro, your host. I'm a qualified financial advisor, but I'm still learning how to invest better and teach others how to do the same. I talk with guests and cover a range of topics designed to get you to think for yourself here. But please keep in mind, this can't be considered financial advice. Be sure to do your own research here and seek qualified advice of your own before making investment decisions. If you want more information, check out the show notes in your podcast player and make sure that you've subscribed to YouTube also. Then follow The Everyday Investor on all social media channels. The NZ Everyday Investor podcast receives support from the following partners: Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand; Gorilla Technology, increasing business success through innovative and strategic IT solutions; Ungaro & Co. Financial advice for everyday people building everyday wealth. Hope you enjoy the show. Let's get started.
Hello and welcome back. Now, this episode was not supposed to go down like this. Last Friday, I had a sound issue. Happens to me roughly around twice a year. Unfortunately, it was last Friday. Going to be re-recording that one shortly. But until then, I thought I would release a few thoughts out of me and into your world, if that's okay. So in this episode, it's just me. I'm talking about the purpose-based investment strategy. I guess what I'm trying to do with this episode today is just help you to build a little bit more context with an alternative investment strategy, which I genuinely believe will be more powerful for the world that is to come. Now, often there's something in my mind that I share with you, and other times it's in my heart. And it's in my heart because it's connected to my purpose. Now, that's going to make you feel really uncomfortable, perhaps, if you came here to kind of fill your head with interesting, puzzling things that you want to work out and satisfy your curiosity. But if you're trying to actually accomplish something, then you do have to recognize that occasionally it goes a little bit deeper, which, as per the introduction, is about building wealth. That's why we're here. That's why I'm having this conversation. So in this short one, I want to talk to you about why you should consider a purpose-based investment strategy right now, rather than just a goal-based investment strategy. My strong and growing belief is that what we're seeing in the world right now presents an equal opportunity for loss as it does gain. How you get on the right side of what's coming, and in fact is already here, is determined by what kind of approach we take, a goals-based or a purpose-based approach. So first off, let me describe a goals-based investment strategy within the context of this episode, of course. Now, I'm referring to when, how, and what questions when we're trying to formulate a goals-based investment strategy. So when is the time in your life when you've decided to stop working because you need to, and you continue to work only because you want to? It's a date that you should set, that shouldn't be inflicted upon you. And it's a really important date if you're constructing an investment strategy, because it helps align your actions to those goals. When may also refer to smaller things, though. Like when I get my personal finance sorted, I'll start investing. There's no point planning for longer-term success when you can't even take care of the immediate term requirements. Now, how may refer to how long should I invest for to get the results that I'm after? Because generally speaking, the longer the time frames are, the bigger the investment returns are. Now, how may also refer to how your investment portfolio looks. You might wish to set up a portfolio that has only 50% in property, 10% in crypto, 10% in shares, and then the remainder just in managed funds, including KiwiSaver. So goals-based strategies include these how and these when type questions to help formulate it. What, though? So what could represent the numbers? How much do you need to have invested at time of retirement? What is that number? What is that number to fund the remaining period of time where you can't work, or where you just have to assume that you can't trade your hours for money anymore? When, how, and what are some of the questions that you might want to answer now if you decide to work on some goal setting that include just simple, tangible, measurable, specific goals. Now, what I'm going to suggest here, though, is that it's also going to be helpful to consider at the same time a much, much harder strategy, because our goals snuggle really close to our intellect, right? It's a comfortable place. So instead of asking yourself when, how, and what questions when you're thinking about your long-term situation or your future or your retirement, this is where you start to really ask these why questions. Why are you here on earth? Why are you happy when you do certain things? Now, your mind will immediately want to jump in here when you start asking yourself these questions. If I was to ask somebody in the context of talking about their investments, what their purpose was, almost every time, without fail, I will get back answers like, well, my purpose is to travel, or my purpose is to just take care of my kids and make sure that they can keep on going with what I was able to leave them with. Or my purpose is to get to a place where I don't need to worry about money anymore and I can buy whatever I want without thinking about it too much. Now, those goals are fine, but they are goals, and that's all they are. They are not purpose-based. They're thing-based, and they often come out of the mind rather than the heart. A purpose-based investment strategy is aligned to cause, mission, reason for living, all that sort of thing. It rises above the nuts and bolts of providing for yourself in retirement, although that is a very, very important thing to do. Think about that, but it goes beyond that. It goes beyond even helping your immediate family to do well. In my opinion, this is actually what's missing with most investors when they try to get more strategic. If you don't have a reason why you're trying to build wealth, then why are you doing it? Because isn't that just gambling? So here's where I'll take what seems to be a little bit of an off-ramp to this discussion so far, where I'm talking about goals-based investing, now purpose-based investing. I want to flip it over and talk about something that happened a while ago, about 50 years ago. It had all kind of started around this period of time, 1971 to 1974, from what I can understand, from Richard Nixon taking the US dollar fully off the gold standard, and roughly around 1974, when it started to become clear that there was some sort of pact between the United States and Saudi Arabia, where the outcome was, from then on, oil was always denominated in US dollars. So that meant whenever everybody in the world wanted to buy oil, they had to first buy US dollars. That created a very strong demand for US dollars and effectively led to cheap credit from that period to today. Now, there's a lot to this, but I'm just going to pull on one really simple thread. It seems like, in a sense, we may have reached the end of that petrodollar agreement. Now, last week I posted that on LinkedIn because, well, to be honest, I saw everywhere I was looking on social media, which really is only 3 places, YouTube, X, and LinkedIn. And so I went there and I saw this article that just kept on coming up. Everywhere I looked, there was this content that kept on coming back saying that it was the end of the petrodollar agreement. Now, it's a story that I've been following for a while, but not as a main headline story, more as one of those fringe threads that you only really want to take so far. But I understand the general argument, and to be honest, if you have an interest in gold or Bitcoin, you're probably going to butt up against this narrative from time to time, so you have to get used to it. The TLDR, though, before I give you any more background here, is that oil from the early 70s was priced in US dollars, which created an infinite demand for US dollar denominated debt. And the oil-rich countries were able to benefit because they effectively had way too much money than they knew what to do with. So while they were trying to build out their physical infrastructure, they parked their money with a risk-free investment. Everybody was happy. The United States effectively had access to extremely cheap credit. They dominated the globe in terms of what currency had to be used, and therefore whatever was backing that currency, i.e. the war machine, would become the dominant player in the world. So the idea is that as the US dollar fades into history, then so does US dominance. So I'm first going to share a little bit of the article that I discovered on this topic in NASDAQ, and I'll include a link to it in the show notes if you want to read it. This is what I shared on LinkedIn. The 50-year-old petrodollar agreement between the US and Saudi Arabia was just allowed to expire. The term petrodollar refers to the US dollar's role as the currency used for crude oil transaction on the world market. And this arrangement had its roots in the 1970s when the United States and Saudi Arabia struck a deal shortly after the US went off the gold standard that would go on to have far-reaching consequences for the global economy. In the history of global finance, few agreements have wielded as many benefits as the petrodollar pact did for the U.S. economy. The petrodollar agreement, formalized after the 1973 oil crisis, stipulated that Saudi Arabia would price its oil exports exclusively in U.S. dollars and invest its surplus oil revenues in U.S. Treasury bonds. In return, the U.S. provided military support and protection to the kingdom. This arrangement was a win-win situation for both. The U.S. gained a stable source of oil and a captive market for its debt, while Saudi Arabia secured its economic and overall security. By mandating that the oil be sold in U.S. dollars, the agreement elevated the dollar's status as the world's reserve currency. This in turn has profoundly impacted the US economy. The global demand for dollars to purchase oil has helped to keep the currency strong, making imports relatively cheap for American consumers. And additionally, the influx of foreign capital into the US Treasury bonds has supported low interest rates and a robust market. The article goes on, but I would encourage you just to do a little bit of deep diving around the author of these articles and then consider how most of what we consume in media actually has been paid to be there. So just always ask that question when you start to investigate some of these scenarios. For me, when I did my due diligence and I started learning a little bit more about it, it kind of became apparent that the more the story itself was not necessarily correct, in that there was no significant event that had occurred. But yes, June 2024, that did mark the end of what could likely be an agreement. But this has been happening for years, and it possibly still has years to play out before it actually finishes. Today, oil can be bought and sold in multiple currencies, not just US dollars. And the US has evolved significantly as well, to the point where they're not really dependent on oil being denominated in US dollars to create demand for US dollars. They're depending on money itself to be denominated in US dollars somewhere in the world. If you check out the euro dollar situation and how that works, you'll understand that there's more than enough debt out there in existence to create the necessary demand for the US dollar. We don't need oil for that anymore. Now, how does this link back to the purpose-based investment strategy? Now, I said at the start that my strong and growing belief is that the type of change we're seeing in the world right now presents an equal opportunity for loss as it does gain. Now, should there be a falling demand for U.S. Treasuries, this at the very least could possibly present a risk that higher interest rates could eventuate over time. Worst case scenario, we have lower but later, and then higher and longer. Maybe eventually that leads to a collapse of the debt-based fiat financial system that we currently know and love. I wouldn't say that's the base case, but it's definitely a possibility at the same time. And why is this relevant? Well, to be blunt, the value of what denominates all of my wealth, all of our wealth, is at risk here. There's so much to be said about the risks, of course, but what about the gains? Let's focus on those gains. And to elaborate here, let me just take one more off-ramp. I believe one of the most important investments any parent can make is to have children. And, well, if you're a parent, I guess you have children, right? So that makes sense. But it's to invest in their children, especially when they're dependent on your income, because that's kind of a form of you investing in some sort of prosperity. Whatever you can make them build themselves means you don't have to give it to them. So think of it like that at the very least. I've shared this before, but all of our kids have daily chores. And I take 1 hour of their time every single weekend, at least 1 hour, sometimes a little more. But we do work. And that work is split doing cleaning, and that cleaning of our cars inside and out, gardening, cutting grass, cleaning up around the place, and cleaning of the house, like scrubbing toilets and windows. They get paid every week, but only if they do the work. They allocate the money according to a predetermined plan. They have literally 4 jars. We pay them in cash so that they can actually see the money. And they choose between spending, saving, investing, and giving when they get paid. Then when there are activities that are triggered in those categories, they know what their budget is. They spend cash, job done. Now, this weekend, I took just my boys this time, and we converted a disused water tank into a chicken house. Not any old chicken house, though. This was something that we could tow around the property so that we could spread the fertilizer from the chicken around the place and prevent damage, but also just to give the chickens a bit of a free-range experience. So we had them out there, and they were angle grinding roofing sheets with super sharp, razor sharp edges. They were pre-drilling holes and then fastening them to battens, and they were using nail guns. They were taking disused wheels from kayaks, and they were all looping it together to make this thing work. And it worked. Within 4 hours, we had something. We were good to go. I'm not going to lie. It was hard. I had to use donuts at one stage for my 13-year-old as a bribe, but we got there. I taught them something that I'm not an expert in, but I taught them something that they didn't know yet. They now know how to do something physical with actual materials, and they now have another skill set, or at least they have exposure to another skill set of working with their hands. I'm investing in my kids in a way that allows them to be successful in the world to come, I believe, because there may be a shift away from capital, away from technology and digital
more towards physical production material, even labor. So I'm teaching them not how to code, but I'm teaching them how to sharpen the blade on a lawnmower. I also want them to know how to hunt, fish, change water filters, tires, do basic electrical work, and I want them especially to know how to create businesses in the future out of the skills that I'm showing them. Not because that's what I want them to be in life, but because I want them to be insured against a very different world. So to sum it all up, here's where I really need you just to pay attention as we come in for a little bit of a landing. At the very least, if you do not have a purpose-based investment strategy yet, start with your kids. I want them to be successful in the future because they're part of me. They're my extension. I'm basically just taking care of myself when I'm taking care of my kids' future. And so whatever skills I have at whatever level, I want to at least get them started so that they can continue to build out from what was already built. But that's a form of intergenerational wealth, right? That needs to continue to flow on from generation to generation, or else it gets lost. So if there is one single point of failure when it comes to, I guess, investing, is that we don't think of this we don't think of it too much. Pick a purpose, any purpose. I've seen a lot of people do really well with this, but they often keep that very separate from their money world. The money world belongs in their brain, and the purpose, that only belongs to some people who believe in stuff which isn't entirely rational sometimes. Why not merge the two together? Are we not one and the same? So if you did develop a purpose-based strategy, start with the kids and then move out. Are you saving kittens in Vietnam? Are you building some sort of orphanage in Ethiopia? Surely there's got to be something that you believe that you would give your resource to if you were already sorted. So we talked a little bit about being a goals-based investor, a purpose-based investor. We talked about the end of the petrodollar agreement. You'll look at any means necessary to accomplish your objectives, not just the things that you know have worked in the past. So as I leave you, do your actions sync up to any sort of strategy that are hanging off of any goals whatsoever? And is there a higher purpose that drives those actions that you take every single day? If you want to reach out to me and discuss what a financial strategy looks like in your world, reach out. Contact details are in the notes. Thank you again for listening in to me. If you can, please leave a 5-star review wherever that's possible. Please subscribe if you're watching on YouTube. And if you're in the audio, please check out the show notes, subscribe to the fortnightly newsletter. Thanks for listening into the Everyday Investor Podcast. Like what you've heard, but you want more? Make sure that you've subscribed to our YouTube channel and subscribe to the Everyday Investor newsletter too. The links for everything are found in the show notes that you can access easily by swiping or tapping over the cover art in your podcast player. If you received value in some way, I'd love it if you could take the time to write a review wherever you listen to podcasts. Share it with a friend, or think of our show partners where appropriate. Easy Crypto, the safe and easy way to buy and sell crypto in New Zealand. Gorilla Technology, increasing business success through innovative and strategic IT solutions. And Ungaro & Co. Financial advice for everyday people building everyday wealth. Remember, some investments or strategies discussed on these episodes may result in financial loss. Be sure to do your own research and ideally seek qualified advice of your own before making investment decisions. Hope you enjoyed today's episode, and we'll catch you next time around.